October 2nd, 2025. A little bit of the thinking and upfront analysis I did before the start of the day. On the right, you can see a 30-minute chart of NQ. Uh, what are all these lines? This is the weekly weekly VWAP with the three deviations, up to the third standard deviation printed. Um, when I was looking at the chart, I'm like, how far extended are we? And when I saw that we were over the third standard deviation, I'm like, well, there's something wrong here. I mean, in statistics, which I'm no expert, I'm only kind of parroting what I've heard about this, but usually, not usually, but 99% of trades occur within the three bands, and usually when you pop out, you'll have this reversion back to the mean at a minimum, and that's basically where we were pre-market. If we look at a 5-minute chart, this is the prior day value area, prior day regular trading hours value area. So you can see that we we went up in value overnight, and coming into the session, this hadn't happened. This big sell-off hadn't happened. I'll show you the execution chart, but I guess my point in showing you this is that we were super overextended. We were overextended from the prior day during regular trading hours, and then there was this crazy pump at night. So what I was really looking for was some kind of reaction at some of these levels, like a failure of the value area high, because this was all very thin volume. I was looking for a reaction, maybe here um, or down here, which kind of looks like we're getting, but we might actually even fail further down. Anyway, let me show you the execution chart. So this is a 2000 tick chart. Let me just kind of turn off some of this stuff to give you a sense. You can kind of see some of the things I did well, and obviously some of the things I didn't do so well. So here's that overnight value area. Um, what I looked up for from an execution standpoint was, okay, we knew that we were overextended with weekly third standard deviation of VWAP. So that was sort of the first domino that fell. And once we fell under that, I was looking for, okay, well, let's see if we can fail a few other things like the first standard deviation of the session VWAP. Because again, I think statistically 70% of all volume typically falls within the bands. And then I looked for a failure of the actual overnight value area high, which we got right around here when I took my trade. And then again, you can kind of see this downtick in volume, in cumulative volume delta. So basically, we had all this aggressive buying dry up, and then it curled downwards. So that was basically my trigger, was a failure of the value area high, or the overnight value area high. You can see I jumped in, and then you can see, so all that, despite all that, very good in my opinion, analysis of structure and pressure, which was the sweet part. The bitter part, from my perspective, was that I didn't manage the trade well at all, and emotions just kind of completely overwhelmed me. I think I made money, to be clear. I made out very, very well, like awesome day in terms of P&L, but I could have done a lot better. What I thought I saw. Oh, yeah, another trigger. Sorry, real quick, was big trades. So I said this before, big trades without context isn't very helpful, but here we see some greed trades come in at the value area high. So we had buyers trying to defend it, but that didn't work, and it flushed down. So that was the other confluence. Was sort of this following momentum and looking at absorption. Okay, now back to what I didn't do so well. Let's just get rid of VWAP just so that we don't have so many lines on the chart. And big trades. And let me plot EMA. I said to myself once I got into this trade, because I thought there would be such a potential big move downwards from how far we were extended, VWAP wise, and all that stuff. I said, I'm going to just let the position ride out, and as soon as it breaks the 8 EMA, that's when I'll get out of the position. And sure enough, I didn't do that. I don't know. Well, I do know why. Emotions and things that weren't on the chart. I I thought were, and I basically just sort of faked myself out. So I'll show you what faked me out on the first one. So on the first one, I actually thought there was going to be some kind of reaction off of the point of control. That sometimes happens, like you'll get a bounce off the POC. So I exited the position, which was obviously a mistake. And then once I saw more big trades come in, I jumped back in. So that was a good move. I realized my mistake. I'm like, okay, let's just get back into the trade. And then once again, I faked myself out into thinking that we were bouncing off of some ledge that didn't exist in the volume profile. So the volume profile is like a two-edged sword. You can interpret it in a few different ways. It's very subjective. So I thought we were kind of getting this bounce off of here. I'm like, I'm out. But again, I mean, the overriding process thing in my decision making process should have been, we're overextended. You've got a whole bunch of big trades coming in, and look, I mean, at this point, I was pretty well in profit. I should have just trailed with the EMA. The EMA was the answer. I had the EMA plot on my chart, and I faked myself out. So all in all, I could have not probably, I mean, if I had just basically got out, let me get rid of, sorry, big trades again, because it's hard to see. But if I had just basically got out over here, I would have squeezed out another 30 points out of the trade. So I'm realizing mistakes. So again, what I did really well was the upfront analysis in terms of structure and pressure. I let emotions get the best of me, and I saw some stuff that just really wasn't there, and my trade management kind of sucked. Again, all in all, P&L was good. Made some money, but yeah, I can do better. Anyway, that was the day. Take it easy.